Hello. Today is Sunday, August 23rd, 2026. Here is your daily signal. According to Fortune, Treasury Secretary Scott Bessent has become the most interventionist chief in decades, driving expanded bond buybacks and yen purchases as part of an unusually activist approach to U.S. financial management. Activist monetary policies refer to aggressive actions by the Federal Reserve like quantitative easing and rapid rate changes since 2008, while U.S. Treasury interventions include large-scale bond issuance to finance deficits and stabilize financial markets, especially during crises such as COVID-19. National debt sustainability is under scrutiny, with U.S. debt exceeding $34 trillion by mid-2024 and debt servicing costs nearing historic highs, raising concern about fiscal stability. The Treasury Department announced on August 23, 2026, it will increase quarterly bond sales due to elevated deficits, intensifying sustainability worries, while Federal Reserve minutes released the same day revealed policymakers debated the risks of current bond buying programs on inflation and rising fiscal costs. Near term, continued activist Treasury interventions could increase debt servicing costs, risking higher interest rates and potentially crowding out private investment. Rising debt levels may make the U.S. more vulnerable to external shocks, such as shifts in global investor sentiment or geopolitical tensions. Over the medium term, sustained policy activism could undermine confidence in U.S. fiscal management, affecting credit ratings and dollar stability. Ongoing intervention may force policymakers to consider austerity measures or tax increases in pursuit of debt sustainability. Next, let's look at big box retail earnings and shifting consumer trends. Fortune reports that Target's second straight comeback quarter was boosted largely by a nearly $1 billion Trump tariff refund, a government windfall that contributed $1.65 of Target's $4.11 in quarterly earnings. Tariff refunds are government reimbursements to importers after trade policy changes, and the rise of Gen Z and millennials is reshaping spending patterns in the big box sector. These retailers depend on global supply chains and are sensitive to shifts in tariff policy and demographic preferences. Earnings reflect the combined effect of macroeconomic, trade, and demographic forces. Walmart, according to CNBC, reported improved Q2 2026 earnings margins, thanks in part to these tariff refunds, while Target's apparel sales increased 5% driven by Gen Z and millennial shoppers, as Retail Dive notes. Costco received over $45 million in tariff refunds in August, directly contributing to its Q3 earnings beat, Bloomberg reported. In the near term, such refunds are boosting retail earnings and profitability. Medium term, retailers may adjust sourcing strategies if tariff policy keeps shifting, creating supply chain uncertainty. Ongoing demographic shifts could force retailers to refocus products and marketing strategies toward younger consumers, with stock prices becoming ever more reactive to tariff and demographic news. Moving on, consider the rapid growth of AI startups in the data services sector. TechCrunch highlights AI data startup Micro one remarkable milestone, reaching a $500 million gross run rate amid the ongoing AI training boom. The global AI startup ecosystem, especially in data services, has seen growth rates exceeding 30% annually from 2021-2026, focusing on machine learning, data labeling, cloud analytics, and proprietary platforms. Venture capital pouring into these startups reached $45 billion worldwide by 2025, reflecting strong interest particularly in North America and Asia, but raising concerns about energy consumption and regulatory scrutiny. Recent key events: Scale AI announced a $1.2 billion funding round led by Sequoia Capital per TechCrunch. Databricks revealed a $400 million acquisition of a Swiss data annotation company as reported by Reuters, and the EU issued new sustainability guidelines for the sector, according to the Financial Times. In the short term, capital influx is fueling innovation but exacerbating resource consumption and increasing the sector's carbon footprint. Medium-term, regulatory actions such as the EU guidelines may push these startups to adopt more energy-efficient technologies and increase transparency, with sustainable practices potentially raising operational costs and slowing expansion. Market consolidation is likely as larger firms acquire smaller competitors to comply with new standards and scale efficiently. Now, onto the markets. International markets saw broad gains, with Germany up over 6% month-over-month led by strong moves in EWG, while Spain outperformed with a monthly rise of 4.6% and EWP marking the best daily advance among peers. Commodities surged as gold climbed 11.6% month-over-month, with GLD the clear leader and uranium URA showing exceptional daily performance. In contrast, agriculture eased slightly with DBA and wheat closing lower on the day. In favorites, Adobe jumped nearly 26% month-over-month, IDBA leading tech outperformers, while AMD slipped 14% and ARM dropped 14% over the month, making ARM the session's weakest performer here. The S&P 500 advanced modestly, with SPY up by 2.4% month-over-month, but semiconductors ended lower, with SOX dropping 6.3% over the same period. Among individual stocks, RF Acquisition Corp Roman 2 RFI soared as the day's top gainer, leaping 226%, while Megan Holdings MGN plunged 97%, recording the session's steepest loss. That's it for today. You can find more news and details on our website. Goodbye.